Welcome to our in-depth exploration of Japan's monetary policy. In this concise video presentation, we'll delve into the intricacies of Japan's economic landscape and the pivotal role monetary policies play in steering its course. First is introduction to Japan's monetary policy. This presentation aims to provide an insight into Japan's monetary policy framework, explores its significance in shaping the country's economic landscape and global implications, analyze key components, objectives, and challenges faced by Japan in managing its monetary policy effectively. Monetary policy effectively formulated by the Bank of Japan, BOJ, is a key driver of economic stability. It influences interest rate, money supply, and credit conditions to achieve macroeconomic objectives. Crucial for managing inflation, promoting growth, and ensuring financial stability. Japan stands as the world's third largest economy, renowned for its technological advancement, industrial prowess, and significant contribution to the global trade and finances. Within this dynamic economic environment, monetary policy serves as a crucial tool for managing economic stability, growth, and financial marketing function. Historical context. To better understand Japan's current monetary policy framework, it is essential to trace its evolution over time. Japan's economic journey dates back to centuries, marked by a period of growth, stagnation, and transformation. From its agrarian roots to rapid industrialization during the Meiji Restoration, Japan's historic economic history is marked by transformative shifts and policy reforms. Post World War II, Japan experienced rapid economic expansion, dubbed the Japanese miracle, driven by export led growth and technological innovations. Through that came the evolution of monetary policy, establishment of establishment of Bank of Japan in 1882, modeled after the Western central banks. Objectives of Japan's monetary policy. At the heart of Japan's monetary policy lies several key objectives. These include maintaining price stability to safeguard purchasing power, fostering economic growth to create employment opportunities to spur investment and consumption, and ensure the stability of financial market to mitigate systemic risks. Also managing the exchange rate by balancing the yen's value to support export competitiveness and mitigate external economic shocks. Key factors in Japan's monetary policy. The formulation and execution of Japan's monetary policy involves collaboration among various stakeholders, namely the Bank of Japan, BOJ, which is responsible for formulating and implementing monetary policies, the Ministry of Finance, which collaborates with the BOJ and provides oversight on financial matters. Then there is the Prime Minister's Office, which sets the economic policy directions, works with BOJ and MOF, and provides political leadership. And mainly, then the most important one, the coordination between government and central bank. Tools of monetary policy. To achieve its objective, Bank of Japan employs a diverse set of policy tools. These include interest rate targeting, which is done by adjusting the target for short-term interest rate to influence borrowing cost and economic activities. Then there is quantitative easing, where BOJ purchases government bonds and other assets to increase money supply, lower long-term interest rates, and stimulate lending. Open market operations like buying and selling of government securities to control the money supply and interest rate in the financial markets, followed forward guidance by communicating future policies, intentions to influence market, and in some cases, negative interest rate, which is done by charging commercial banks for holding the excess reserves to encourage lending and stimulate economic activities. Each tool serves a specific purpose in managing monetary conditions and achieving policy goals. Impact of monetary policy on the economy. Japan's monetary policy exerts a profound influence on key economic indicators. Fluctuation in inflation rates affects consumer price, aiming to achieve a stable inflation rate in line with target objectives set by the government or central bank. GDP growth, employment level, and financial market performance are closely monitored to gauge the effectiveness of policy measures and their impact on the broader economy. Challenges and controversies. Despite its effort, Japan faces several challenges and controversies in the realm of monetary policy. Persistent deflationary pressure, which is characterized by prolonged periods of falling price, poses challenge to monetary policies effectiveness. There is demographic shift resulting from an aging population of Japan and debates over the effectiveness of unconventional policy measures. Exchange rate fluctuations are also among the key issues confronting policymakers in Japan. In recent developments and future outlooks, recent developments such as Abenomics, spearheaded by Prime Minister Shinzo Abe. Abenomics refers to the economic policies implemented by Prime Minister Shinzo Abe, aimed at revitalizing Japan's economy through three arrows: monetary easing, fiscal stimulation, and structural reforms. Under Abenomics, the Bank of Japan pursued aggressive monetary easing measures, including quantitative easing and negative interest rate to combat deflation and stimulate economic growth. The impact of Abenomics on monetary policies has been significant, with the BOJ implementing unconventional measures to achieve inflation target and support economic recovery. The response to the COVID-19 pandemic, Japan implemented various fiscal and monetary measures to mitigate the economic impact of the crisis. These have shaped Japan's monetary policy landscape. Looking ahead, ongoing analysis and adaptive policy measures will be essential in addressing emerging challenges and ensuring Japan's continued prosperity. In conclusion, Japan's monetary policy plays a vital role in shaping the country's economic trajectory. Tools like interest rate, quantitative easing, and forward guidance are pivotal. As we've seen, it extends far beyond financial markets, influencing inflation trends, employment levels, and overall economic growth. Moving forward, policymakers must navigate evolving economic conditions and challenge to steer Japan towards a path of sustainable growth and stability. Thank you for joining us on this journey through Japan's monetary policy. We hope you've gained valuable insight into the complexities of economic management and critical role of monetary policy in shaping Japan's economic destiny.